Hey, what's going on, traders and investors? Todd Gordon here of Inside Edge. Got out in the backyard, just couldn't be in the dungeon, the basement anymore. That's where my office is. So beautiful out. Just doing some market stuff. I'm also going through an account statement from a client who's coming on from an unnamed large bank that is 22 pages filled of complex, underperforming investments with fees embedded in there. So let's get in to the markets. I have, I think, some macro stuff. We shorted gold in our Active Opps portfolio. I'll show you that. I'll show you the broader markets, and then, it's kind of a holding day as the indexes that I'll show you have broken resistance, but you're seeing some of the defensive names just on Thursday here sort of lead. So there's a couple opportunities, but it's sort of an on-hold day and an otherwise, I think, very strong uptrend that, again, broke some resistance. So forgive me, I'm on a one-screen laptop here, so it's going to be a little sloppy. But, here's what I'm thinking. The S&P and the NASDAQ are both up 25 basis points and down 20 basis points respectively. So it's a quiet day. But, what I think, if you look at the S&P longer term from a very simple technical point of view, the big sell-off that we saw in March and April was actually very symmetrical, believe it or not, compared to the 22 sell-off. The amount of points in 2022 from 48.15 down to 34.90, whatever that is almost exactly equal to the point sell-off that we had from February down to the lows. It would have been 48.14. The low is whatever, 48.35. So it missed by 21 points, right? And then we've rallied back. Last time I was on CNBC was, I think, the 8th or the 9th, somewhere right around here. And I'll say, look, I think the growth trade's going to stabilize. I think we're in good shape. We sat back. We made a much higher low, and we're moving on the top side. Now, the way I look at, is this a correction to the newly formed downtrend is what I do is I just take a simple, and again, I'm just doing a one-screen laptop setup here, so just bear with me. But I just do a simple fib retracement of the correction. And if you break 786, which is the last correction, the last retracement, then you're probably going to new highs. So the 786 is right there, and that was at 58.66. The 618 was at 5645. And what happens is, if there's a lot of stop runs going on through the 618, which everybody knows about, it'll usually get up to 786, and that's where it exhausts itself. But if it's a true move and it's not a correction to the newly formed downtrend, it's not a stop run move, it probably is something greater and probably should go reach the 1272 extension, which is higher. So just a little simple fib for you. But again, the fact that we broke 5866 in the SPX is real. Today rates are down a little bit. So the 10-year yield is down 1.6% to 4.455. The name of the game in U.S. yields for a long time, and this is not what it seemed with all the news about coming inflation, and even Powell said, look out for coming inflation, which I thought was interesting. I mean, U.S. yields are, what year is this? This is October 22. U.S. yields are at 4.365. We're at 4.455 now. Over almost 2 years later. So I mean, we're really very sideways. I look at the dollar. I think the dollar is the most liquid, internationally accessible voting market, voting booth, let's say, as to whether the U.S. is going into recession. And as the probabilities of U.S. recession were increasing, the dollar was selling off. So here's the dollar on the weekly. We tried to break down through this pretty, loose zone of support around 100, and then we're ripping back above. Here's the weekly. So we kind of false break to the downside, and that corresponds to the stock market recovering, which, again, usually the dollar and the stock market have an inverse relationship. But again, the way the macro relationships now are, I think the dollar, again, is the voting booth, the world's voting booth for whether the U.S. is going into recession, and we're getting back above. So with the stock market breaking that 786 resistance, the dollar false breaking to lows, I would think that's a good sign for gold to move lower. I was up several times last night. I had some gold futures positions on the downside, made some good money on it. I have GLL, which is a short gold ETF in Active Opps portfolio. I'm watching the development today, and again, there's no real clear takeaway today. Here's the daily on gold, and basically what you have is a measured move. So distance traveled here is equal to here. This is the 50-day moving average in gold. We tried to break below it, but then we came rallying back here. So that, that's interesting. I'm hearing what the market's saying. Rates are down, bonds up. And also, if we read the sector report card today, what's up the most? Utilities, staples. Utilities up 2.13, staples up 1.9, real estate up 1.7, healthcare up 1.25. And it's not like tech comms communications are getting wrecked. I mean, consumer discretionary is down 0.3, whatever. XLK is down 0.12, energy, comms, financials, materials. Like it's just a holding day. It's just a holding day. So, there's a few names on the utilities that I'm thinking about this Saudi Arabia deal. The utilities and some of the power generation names, GE Vernova is one. And the utilities are getting a bit. I think a combination from the pause in the risk on trade, sort of that, as I mentioned, higher gold, lower rates. It's actually slightly lower dollar today with the lower rates. So that makes sense. And the defensive names are coming in, but there's also, I think, a certain degree of risk on from energy and power demand. Like I looked at some of the financials within XEL, which is very sideways since November of 24, but pretty good little consolidation pattern there. Pays a pretty good. Let me see if I have this up still. I'm going to come back to Sprouts and the staples, but this one didn't look bad. I'm also in the middle of redoing the portfolios, both the growth and dividend and inside edge. And this is one that's interesting that came up to me. $40 billion electric utility company with a 3.28% yield, trading 18.7 times forward earnings, which is expensive for a traditional defensive utility, but we're talking power generation here. And if you look at the expected earnings, I mean, look at this. 2022, the company made $3.17 for the year. 2023, $3.21. Then we start kicking it up. 2024, $3.44 for a 7% growth. 2025, a 10% growth to $3.81. And then 2026 up to 4%, with decent top line growth. It's kind of a pause in 23, but then they're looking to go 15, 16 on up. So decent little move there. There is a component of those utilities with the power generation. And again, I think the big recipient of the Saudi deal with, us providing military funding in exchange for an investment back in the U.S. out of the Saudis, GE Vernova was interesting. Okay. Back over here, the other one moving today are staples, and I'm showing you my positions over here in Active Opps. As I said, a little bit of a break today. The portfolio has been very strong. Celsius is in there trying to break up through the 40 mark. But if we flip over to consumer staples, there's a name that I'm watching, SFM, which should be in here somewhere. There's SJM. Let me just type it in. I know it's in here. Sprouts Farmer Market. I don't mind this at all. SFM up 1.86%. Here's a weekly. Here's a daily chart. I'm liking the look there. And then if we go over here to look at it over here, like here's the daily on the right. And again, we broke above resistance, acted as support, coming back to it as support. And, this is not a traditional consumer staple like Kimberly-Clark or, Coca-Cola or Procter & Gamble, something like that. Like, you look at the growth on this guy, 13% growth in EPS in 2022, 4% growth in 23, 50% growth in 24, 35% growth expected in 2025, 12% next year. And those numbers can certainly be revised higher. So you have steady bottom line growth, steady top line growth on the revenue. It's not trading like a staple at 31.5 times earnings, which if you take price of 161 divided by 507, expected EPS, that's going to give you your forward. The ROE was interesting as well, 55.18% return on equity. It's really high, but, I like it. So, as a possible growth name, I could put it in the growth portfolio or, even in the the dividend portfolio, because you look at the beta, the movement compared to the underlying index, it's less than 1. So, it's saying it's less volatile than the index. So this is an interesting name as well. But, I think the point that I'm making is it's a holding day. I'm going to hold the GLL short position in gold. I think the dollar continues to rally back as chances of a U.S. recession are priced out. I think the fact that the indexes broke the 786 retracement is key, and we're probably going to new highs. We have NVIDIA coming up on May 28th. So I think it's just a holding day. I just want to report, from finally it stopped raining here in upstate New York. We opened the pool, I don't know, yesterday. I got to get a new liner. I'm building some new umbrellas, and let's get the summer started. But yeah, that's all I got. Just want to share that with you guys. Hope all is well. We are sharing all of the positions that we're trading in our one model called Active Opportunities, Active Opps, in Savvy Trader. We're transitioning out of TradingAnalysis. We're going to Inside Edge full time, and Savvy Trader is a wonderful third-party company that allows you to see all the position updates in real time on that Active Opps portfolio. I showed you a piece of it, and we'll have a link in the video for more information. All right. So other than that, hope all's well, and we'll see what tomorrow brings on Friday. See you guys. Take care.